how the transfer pricing analysis is to be undertaken. Friends, if you have clicked on this video, I'm sure that you are also eager to learn on this subject called transfer pricing. Hi, this is CA Abhishek and welcome to my channel, The Learning CA, where we keep posting videos in the area of international tax, transfer pricing and FEMA. And if you are a tax, accounting or audit professional, and if you wish to learn more on these subjects, we have ample videos on our channel which you can see. Now coming back to the topic, how transfer pricing analysis is to be undertaken. So friends, I would just first request, in case if you don't know what transfer pricing is all about, then you can watch our earlier video, which was what is transfer pricing. You can also go to our channel and find that video. It's just a previous video where we can explain what is transfer pricing. Now, similar to that video only, we are not going to discuss any technical aspects in this video. I'm going to try my level best to explain you this particular concept, that is how we undertake the TP analysis in the simplest manner. We are not going technical, so rest assured. If you also don't know the provisions, it's fine. It's just that you need to learn the concept so that you can understand the same well afterwards. But before going to the video, let me tell you that if you are ambitious professional, let's say ambitious tax professional who wish to learn the concepts of transfer pricing in the practical manner, as also wish to practice in Indian transfer pricing market, then we have a dedicated course for you, which is we call Mastering the Art of Transfer Pricing in 9 days. I have tried to cover around 900 plus main topics and subtopics into that course, making you, giving you the entire 360-degree approach that how to start your entire practice, and the entire content gets completed in 17 hours. To more details, you can click on the link below. So coming back to topic, you all are interested in knowing how to undertake TP analysis. Friends, we are not going technical this time. We are not going to evaluate provisions, etc. all this time. So we are just going to understand in the simplest manner how the TP analysis is to be undertaken. What are the aspects that we should consider for undertaking the TP analysis? So now let me just tell you that if you have seen the earlier video, that is what is transfer pricing, then you can watch this video so that you can understand that how the TP analysis is to be taken, that what are the processes. So now in previous video, I'm going to explain that what is arm's length price, what is transfer price, and what is the purpose of transfer pricing analysis, why companies should undertake that analysis, right? So technically, the company should undertake that analysis because they need to compare their transfer price, that is the price at which the transaction has been undertaken between related parties, if the same transaction would have been undertaken between unrelated parties or in a third party scenario, or you can say in an uncontrolled scenario, then at one price that transaction should have taken, right? What would have been the value of that transaction? So that is what the purpose of TP analysis is. And that is where for undertaking the TP analysis, you are required to understand two main fundamental aspects of the transaction. Listen that carefully. You can also note down those things, right? So what are these two aspects? First, the factual aspect of the transaction, where we understand that what is the nature of transactions, what are the terms at which the transaction has been undertaken between this related party, what are the types of goods and services, right? That is what I told, that nature of transaction is important, terms are important, as also the roles being played by the parties in that transaction. You can also go ahead and you can check the video on supply chain, which in transfer, how to undertake the supply chain analysis in the transfer. See, we have also video for that. You can also check that video on our channel. Let me just give you an example here quickly. That so if a transaction has been undertaken between related parties, out of that one party is manufacturing entity, the other is a distributor entity, then you need to understand that what roles and responsibilities are being played by those parties in that transactions. What risk have been assumed by those parties in that transaction, and accordingly, you need to understand the factual aspects of that transaction. For that, you can also understand, how the intercompany agreement has been developed. If there exists an intercompany agreement, then, you need to understand the actual conduct of the parties, and appropriately you need to understand that, you need to conclude on that part that which party has played a role in that entire transaction. So this is how you understand the factual aspects of the transaction. So once when you are done with that factual aspects, when we evaluate the factual aspects, you come to know that how you need to benchmark the transactions, how you need to perform a comparable study on the transactions. So now that is where our second part of the analysis comes up, so first part, you understood that factual aspect of transactions. Now the second part comes up where you need to understand the economics of the transaction. That is, if the same transaction have been undertaken in an uncontrolled scenario, right, between third parties, then how the same would have been undertaken, and what are the aspects that you are required to follow or evaluate in that particular process. That is what we call economic analysis, which also captures the overview of an industry Then after also it captures the comparables availability of the comparables in the market, and if there are any options which are just realistically available in as against that transaction, right? So that also had to be required to be considered. So this is how, you need to first part is then you undertake the actual analysis as functional analysis. And the second part is that you understand the economic analysis of that transaction. That is, what is the degree of comparability of that transaction, the third party transaction? Are there any adjustments are required to be made or not? Or what are the sources from where you can get the comparable data? So this is how you undertake the economic analysis. And that is what's when these two both processes are over, then you can obviously conclude on your findings. That is whether the transaction has been undertaken at an arm's length value or not. Right. So this is how you have to undertake the entire TP analysis. This is what the gist of the entire TP analysis is. There are many, many processes and provisions which we need to look into when we are undertaking this analysis. Relevant provisions, relevant jurisdictional provisions will be applicable. So we'll have to follow that and then appropriately that understand that how the analysis has to be undertaken. So I hope this video was informative to you. And if you wish to learn more in detail about transfer pricing, we have an integrated course where we have explained how to undertake that analysis in a very practical manner. We can explain the entire curriculum in a demo world. And that is where you can click the link below. And if you wish to subscribe to that course, enroll to that course, you can enroll by clicking on the link below. This is Bhavsar. I hope you have liked this video. If you have liked this video, please hit the like button. And also, if you're new to this channel, please do subscribe to our channel. The learning series where we keep posting videos in the area of transfer pricing, international tax, and FEMA. This is Bhavsar signing off. Thank you.